Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis, welcoming you to Money Talk for Thursday the 13th of May. It's Fed Day once again. We'll discuss the outcome of the Fed's monetary policy meeting and what they've said about interest rates with our guests very shortly. This podcast is sponsored by Surfin Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, the Federal Reserve on Wednesday kept its key interest rate unchanged and signalled that just one cut is expected before the end of the year. The central bank held rates at a 25-year high of 5.25% to 5.5%. The new predictions marked a significant change from the FOMC's last dot plot in March, when officials signalled 3 cuts this year. But 4 members of the committee said they're expecting to make no cuts at all. The latest data on US inflation issued Wednesday was marginally below economists' expectations. The consumer price index was unchanged in May, though it increased 3.3% from a year ago. Both numbers were 0.1 percentage points below market expectations. Excluding volatile food and energy prices, core CPI increased 0.2% on the month, marking a fresh 7-month low and 3.4% from a year ago. And China's consumer price growth was weaker than expected in May, while factory price deflation eased slightly. The annual consumer price inflation rate remained at 0.3% in May, holding steady for the second straight month. It fell short of economists' forecasts of 0.4%. It was, though, the 4th straight month of consumer inflation, signalling an ongoing recovery in domestic demand. The producer price index declined 1.4% in May, easing from a 2.5% contraction in April. Brussels has announced tariffs on Chinese electric vehicle imports of up to 48% as the EU tries to stem the rising tide of cheaper EV imports. Tariffs will vary according to the brand, with the world's largest EV producer BYD being hit with a 17.4% levy. Car makers that didn't cooperate with an EU probe into Chinese subsidies will be hit by 38% tariffs. And those are in addition to an existing 10% levy. The tariffs, though, are still well short of the 100% duties applied by the US. On today's programme, I'm joined by Andrew Freris, the CEO of Ecognosis Advisory, and William Ma, Chief Investment Officer at Grow Investment Group. With a view from Taiwan is Ross Feingold, Director of Research at Caerus Consulting in Taipei. And providing our regular weekly updates from the UK on the British general election is Richard Harris, Chief Executive Officer at Port Shelter Investment Management. If you want to get in touch, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
US stocks closed at record highs for the 3rd straight session as the domestic inflation report slowed more than expected in May. The S&P 500 closed above 5,400 for the first time, ending the day 0.9% higher at 5,421. The Nasdaq Composite gained 1.5%, ending at a record high of 17,608. The Dow, though, slipped 35 points, or 0.1%, to end at 38,712. Treasury yields dropped sharply after yesterday's CPI print pointed to moderating consumer prices during May. The 2-year Treasury yield, which moves with interest rate expectations, was down 7 basis points at 4.76%, but it had hit a 2-month low of 4.67% during morning trading. The 10-year yield fell 7 basis points to 4.33%, having reached as low as 4.25% earlier in the session. That was its lowest level since April the 1st. The US dollar fell against all of its developed world counterparts, weakening 0.4% against a basket of 6 peer currencies. The biggest selling activity was recorded against the euro, as political uncertainties in Europe eased a little after French President Emmanuel Macron announced he wouldn't resign regardless of the upcoming election results. The euro rallied 0.7% against the dollar to 1.0815. The yen climbed 1/3% to 156.5 yen per dollar. In Shanghai, the yuan was 0.2% firmer at 7.238 renminbi per dollar as traders reacted to Chinese inflation figures, which showed that consumer prices increased steadily in May while producer price deflation eased slightly. Gold gained 0.4% to $2,323 per ounce. Brent crude oil settled 0.8% higher at $82.60 a barrel. Bitcoin was up about 2.5% at $68,600 after hitting $70,000 earlier in the day. In local stock markets, shares of Chinese electric vehicle companies listed in Hong Kong dragged the Hang Seng lower on Wednesday. The benchmark index fell 239 points, or 1.3% to 17,938. That's the lowest since April the 30th. NIO plummeted 8.5%, while Geely, which owns Volvo, shed 4.8%. Li Auto dropped 3.8%. And BYD, the world's largest EV manufacturer, tumbled 3.7%. On the mainland, the Shanghai Composite Index rose 0.33% to 3,037. COSCO Shipping, one of the world's largest container groups, extended its losses as its mainland listing fell 3.4%, and it did drop more than 10% the day before. And futures markets pointing to a small rebound for Hong Kong stocks, up about 100 points. The Hang Seng Index expected to start trading around about the 18,040 level. You can get more details on the latest market movements in my daily newsletter, which you'll find at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
And it's time to welcome our Thursday morning guests on a busy day of financial and business news. We have with us Andrew Freris, the CEO of Ecognosis Advisory. Morning, Andrew.
Morning.
And also with us is William Marr, who is Chief Investment Officer at the Grow Investment Group. Morning to you, William.
Good morning, Peter.
The Federal Reserve on Wednesday kept its key interest rate unchanged and signalled that just one cut is expected before the end of the year. The central bank held rates at a 25-year high of 5.25% to 5.5%. Now, the new predictions, they marked a significant change from the Federal Open Market Committee's last dot plot, which was in March, when officials then signalled 3 cuts this year. But 4 members of the committee said they expected to make no cuts at all this year, while 7 said they thought they would make just 1 quarter-point cut. 8 out of the 19 members backed 2 cuts. The median projection for the benchmark federal funds rate was 5.1%. That implies just over 1 quarter-point cut this year. For the period through 2025, the committee now sees 5 total cuts, equaling 1.25 percentage points. That's down from 6 that it projected in March. And if the projections hold, it would leave the Fed funds rate at 4.1% by the end of next year. Andrew, what's changed over the past 3 months to see this sort of quite a dramatic revision, isn't it, on the number of interest rate cuts that the Fed itself is projecting?
Well, basically, as far as I'm concerned, I'm afraid you're asking me what has changed. What has changed for Fed? I'm afraid it's not for me to tell us what has changed.
But what's changed sort of factually, if anything?
Nothing, actually. The CPI is completely all over the place. The CPE, which is apparently their index for us to watch, it is accelerating. Okay, let me just give you the numbers. January 2.4, February 2.5, March 2.7, April 2.7. Sorry, that's not a slowing down. So, I don't know what the Fed is either smoking or considering. Looking at these numbers, okay, inflation is getting worse, not getting better. But anyway, they're not going to increase interest rates, which at least it matches it. Okay, at least what they're saying is consistent with what their figures are pointing, but not necessarily by saying that, well, inflation is weakening. Well, according to those numbers, no, it ain't. It's just as simple as that.
Do you think they will even deliver that 1 rate cut this year?
No, I don't think so. I don't think so for a very, very simple reason. They have made it very clear. Remember, I'm only telling you what poor little old me listens to. Okay, they said that they are not going to do anything until there is clear evidence that inflation has come down and stays down. And now we are seeing that they are not even saying that the 2% is going to be the target they are looking at, but they are looking at the 3%. But inflation is still above 3% because the decimals are not 3.0 or 2.9. So I just can't see how, A, they're going to keep to the 2% because that's not there at all, or if it is the 3% they're keeping, it is going to be ominously near the 3% level. And you can't have that. You will need to have something which is either permanently at 3% or slightly lower than 3%. I'm sorry, this is verbose and basically nonsense. Okay, but fortunately, what the Fed is telling us, to my ears, also is nonsense. And it just doesn't make any sense. Are you hitting 2%? Yay or nay? The answer is apparently no, we're not now hitting the 2%. We are satisfied with the 3%. Or they say long-term inflation, okay, is likely to be higher than expected.
So, William, what are your thoughts? Because this is quite a significant change in the dot plots, isn't it? From 3 cuts to 1. So it suggests either they were wrong 3 months ago or they're wrong now, because, as Andrew says, not a lot has significantly changed between now and then.
Well, I think their argument is data dependent. When data change, they change. So I think they're in a position that they try to prove themselves they're not wrong. I would more, trying to argue from inflation perspective, from on the ground, Chinese exporter, perspective. We are seeing, at least the goods, inflation will be quite sticky in a deglobalization world. When I talk to some of our export, clients, for example, in biggest, export center in China, like Ningbo and some other area, we are seeing, actually the price has been quite sticky in terms of export. So I don't think China is able to export deflation like, what they did in the past, 10, 15 years. And secondly, we are also seeing some Chinese manufacturer being asked by their global clients, like some of the furniture manufacturer, ask them to start up, assemble lines in Vietnam and some other places. And those clients tell us that, if they start an assemble line, in Vietnam and other places, prices will go up. So I think in the deglobalization world, it's quite hard to expect prices will go down, hence inflation will be sticky. The second point is oil. I don't think oil is in any time, have the chance to further go down. So combining those two factors, I think inflation could be quite sticky, and hence the rate cut could be delayed, for a while.
Do you think the Fed is now projecting 1 rate cut before the end of the year? Do you think we'll get that 1 rate cut?
I believe it's important. It's very symbolic because they have been, kicking the cans down the road quite a while. I believe may not be as soon as September, but I think by the end of this year, after the election, for various reasons, the first cut is important and symbolic. At the end of the day, I think ECB did their first cut, and I think it's quite important for them to answer, the market.
Do you think, Andrew, once we get this rate cut, whenever it comes, is that then going to be the beginning of a series of rate cuts, do you think? Or have we got to almost look at maybe what the ECB is doing, whereas, they might cut once, but no more this year?
Peter, President Truman famously said he only wants a one-handed economy, so they cannot tell him, but on the other hand, Mr. President. No, I will not tell you on the other hand. I will tell you the even better expression in economics, depends. Yeah, of course. If they cut interest rates symbolically and the inflation stays at 3% and then it doesn't go down, the answer is no. Actually, this is so unscientific that if I was somewhere hired as an economist, perhaps I should be fired. I look at all the numbers, I try to do my own projections, I try the understanding, and there seems for us to have a pivotal point where inflation in the States has hit the 3% level and refuses to budge, or it will do it only unless exceptionally high interest rates. And since the Fed didn't have the decency to give us a trade-off table whereby for every 1%, 100 basis points, for every 25 basis points, after a period which used to be the famous 9 months, inflation comes down by X%, then we will have a price list. We'll say that if the Fed really wants it at 2%, then they need to increase interest rates by 300 basis points or whatever the thing is. So, cutting the interest rates without really having any idea of how the movements in interest rates affect inflation. I'll say that again slowly. I have not seen the Fed telling us what is their expected or believed price list.
Well, it's interesting because that's what I really wanted to ask you. Do you think the Fed's decision-making process is clear? And then, if it is, do they react to the incoming data in a manner that is consistent with that process?
No.
A short but clear answer.
Yeah. If you're asking me why, I will tell you, because if I look at the numbers, okay, they are completely all over the place. The numbers have got every right to be completely all over the place. But if the Fed tells me that inflation looks better and their favorite number is actually accelerating, I'm looking puzzled. I mean, this is Alice in Wonderland. Words mean what I mean them to mean, not what they actually mean. There you go.
Now, William, we should put this into context, the Fed meeting, because just before that, we had the latest inflation data from the US. The consumer price index was unchanged in May from the previous month, but it did increase 3.3% from a year ago, both rates slightly below expectations. The core CPI was up 0.2% on the month, 3.4% from a year ago. I presume this is what the markets reacted to, because the reaction to the Fed meeting would have been rather strange, wouldn't it? They're taking cuts off the table, but at the same time, the market went to record highs. So I presume this was the piece of data that the market liked. But at the same time, even though it was below expectations, we're still way above 2%, aren't we?
Yes, I think that this is a typical sort of late stage, bull market symptom, if you like. In whatever news, they treat it as a good news. And back to the inflation, when I talk to my US friends, actually, they all complain that, living on the ground, things are so expensive, services and everything is definitely higher than, what the current level the market is projecting in, if you like. But at the same time, I think, risk sentiment has been very strong. I think, as long as the Fed is not indicating there is a possibility for increasing interest rate, which I think at the statement they said there's no one who voted for potential increase. As long as this statement hold on, I believe the risk on sentiment will continue for the rest of the year. Whether there is a first cut or not, relatively speaking, it becomes a good news, for the market to continue to go up.
It's a very narrow base, though, isn't it, that this market is going up to record highs on? It's about 10 stocks, basically, accounting for the majority of the rise in the S&P 500. That's a little bit dangerous, isn't it?
Yes. It's a magnificent, not 7, it's magnificent 1 right now.
Magnificent 3, actually. There's 3 companies with valuations of $3 trillion or more, Microsoft, Apple, and NVIDIA. So we're down to the magnificent 3 now.
Yeah, but if you look at some of the global family office survey, done by the Global Investment Bank, they survey about 320 family office with 600 billion, total AUM, if you like. I think the first theme is AI, the second theme is MedTech, and the third is robotics. Same as, the Chinese client and other people. I think everyone is so into the global AI theme in US, so we believe the concentration or the trend will continue.
Andrew, this inflation data that we had yesterday, the CPI, I think it really just backs up your point, doesn't it? It's 3 point something, just like it has been all year.
No, exactly. I very frequently, I think the use of Occam's razor, which is a very simplistic philosophical approach to understanding cause and effect, is to use the simplest possible explanation and forget about either econometrics or Fibonacci curves or whatever. Incidentally, Peter, until very recently, I thought Fibonacci was an Italian restaurant in New York prepared by investment advisors, until realized it was an important mathematician. Yeah, the answer is it is 3 and it's stuck there and it's not moving.
Okay. William, let me ask you about China's inflation, because we had data out from China as well yesterday. Consumer prices edged up, but factory deflation did ease. The annual consumer price inflation rate, CPI, remained at 0.3% in May, second straight month. It's been at that level, but it was below what economists were forecasting of 0.4%. Is the fourth straight month now of consumer inflation. So what is this signalling? Is it signalling an ongoing recovery in domestic demand at all?
I think from on the ground, observation, talking to the consumer and all the manufacturer, I think demand is still there. I don't think demand is weak, but definitely price competition is very keen. So we are seeing, price cut. I'll give you one example. Is one of our clients is one of the largest, mooncake manufacturer in China. So they have to cut price by 30%, but actually they are maintaining 10%, year-on-year volume growth, if you like. So if you cut prices, for the mooncake
by 30%.
Cut price by 30%, but
big.
you get 10% volume increase. So this is a big one, big money. But I think the so-called competition is high, but the volume is there. I think it's also reflected in the last kind of like data point during the Duanwu festival over the weekend. I think volume traffic for the traveler has been increasing, but per ticket item in terms of sales is reducing. So I don't think it's deflationary, but I don't expect further inflation. And part of the data point, if you take deeper, is because of the pork price increase. Other than pork price increase, other goods actually there is no price increase, if you like, in the inflation data.
Andrew, what's your assessment of what this consumer price inflation data from the mainland is telling us about the state of the mainland economy and consumer demand?
Let's start first with what I call the man from Mars observation. Man from Mars comes down and says, what's the main concern of the big two ones, that's European Union, to some extent Japan and United States? And the answer is they want reasonably good growth with very, very low inflation. China has got it. It has got nearly a 5% GDP growth. In the last 3 quarters, we have been doing 4.9, 5.2, 5.3. GDP is growing at a very good rate, and they have no inflation problems. So, somebody will say, hang on a minute, what's the problem with the Chinese economy? I mean, this is the ideal at which United States and European Union are driving at. In other words, low and steady inflation, okay, and a reasonably good GDP growth. China is doing this. However, the big however is that I would like to think in terms of that China does have a growing by deflationary economy. Can you have that? Well, it's not a matter can you have it. China has had it for nearly 2 years. The CPI for more than a year and a half has been never, I think 1-2 occasions been above 1%. The rest of it was actually below 1% and down to 0, and very frequently minus. The PPI has been minus for, I think, coming up to 2 years. And then my favorite index, I'm sorry I keep repeating this, Peter, but I think it is important. The index of newly constructed houses, apartments, residential units in 70 Chinese cities has been shrinking for, take a deep breath, for 2 years completely. And it has been down, it has been declining for nearly 3 years. Well, now, that's what I call a deflationary economy, not just in terms of inflation being low, but in 2 major indexes, inflation being negative. And still, GDP growth goes on. Well, the answer is clearly, for the time being, GDP growth is sustained not by consumer spending, but sustained by investment, and to some extent, by what the state has been doing, which is primarily driven in infrastructure performance. So now, it looks peculiar, but that's the truth. I'm not forecasting. I'm telling you what is.
So if China has this sort of economic nirvana that the US and the European Union are aspiring to, of good solid growth, low inflation, it sort of begs the question, why are people so worried? Why so much discussion about this, about the economic situation in China? Although I suppose, if I want to answer my own question, Andrew, one of the concerns must be it's unbalanced, isn't it? It's depending a lot on exports and on infrastructure spending, and not very much dependent at all on consumer spending. Is that one of the concerns?
Precisely. So far, so good, to the extent that they managed to maintain a substantially good GDP growth at the same time with a deflationary economy. Yeah. And that is, of course, the reason why that the stock index hasn't been performing. Now, we do all know from 101 finance that GDP growth and stock markets are not correlated. And that's absolutely true in the case of China. That's a very, very simple explanation. Okay, why this is not getting better? Because people are saying the goods and services that companies are selling, okay, are coming down all the time. Is this a bad thing? Well, sorry, Peter, very, very quickly. This is a dangerous comparison to make, but Japan, for nearly 15 years, had a deflationary economy and still managed to be the third biggest economy in the world. In other words, it could be that China might enter a relatively low inflation, extremely low inflation period, and still manage to get there to the 4 to 5% GDP growth.
Okay, William, let me just ask you about the other aspect of the inflation data that was out yesterday, the Producer Price Index. Now, that declined 1.4% in May, although it is better than the 2.5% contraction we saw in April, more or less in line with what economists were seeing. But we've now had 20 straight months of contraction in factory gate prices, although it does appear to be moderating this contraction. So what is that telling us about the economy?
Yeah, I think moderating is the right words, and actually this is a good news. If it's not going down, to be honest, over the past 12 months, if you talk to the business owner, the manufacturer owner, they were quite pessimistic. In particular, if they have some, export kind of like business, because they don't know whether US is hard landing. They don't know the export demand is sustainable. So as a result, capital expenditure, CapEx, has been quite, muted. But I think, talking to them again early on this year, we are seeing stabilization. In particular, I think both the market as well as the manufacturer data point, they are quite surprised on the upside was the May industrial profit. The IP figure, it was positive on the upside. That reflect actually sentiment from the business owner is coming back. From on the ground, talking to people, I do see some of them are actually hiring people. So my view, if we have to project is we believe confidence is coming back and people are slightly spending capital expenditure. I don't think that figure will continue to shrink for too long, as long as the kind of like industrial profit figure, stay at the same level.
Okay, let's move on to some trade issues. Brussels has announced tariffs on Chinese electric vehicle imports of up to 38%. The tariffs are going to vary according to the brand. BYD has been hit with a 17.4% levy. Geely Auto is going to be subjected to an additional 20% of tariffs. And the car makers that didn't cooperate with the EU investigation into Chinese subsidies are going to be hit by 38% tariffs. Now, that's in addition to an existing 10% levy, so it takes the maximum tariffs up to about 48% on Chinese EV imports, although if you compare that with the US, they have 100% duties applied by the US. Andrew, your initial thoughts to this, first of all, what is the impact going to be both on the EU, some of these EU countries, and also on the EV producers themselves?
In the case of China, now these are numbers that are hazy. They are not accurate, but they are not inaccurate. China's exports is well over 1 trillion, and exports of EV is something like 40 billion, which means it is tiny in relationship to the total. And the numbers that I've heard being floated around of what is going to be the impact of exports to EVs to the European Union perhaps may go down by 20%. It still means that taking exports as a total, a reduction in EV exports to the European Union is going to be a minor drop in the bucket in total Chinese exports, although, of course, for individual companies, it might be quite significant. Okay, and as far as the EV is concerned, I think the numbers that have been seen flouted around is that this kind of tariff hit is likely to do the trick. In other words, it's likely to stem them. If they go down by 20 or 30%, that's a very good reduction in relationship to the European sales of EVs. So yes, quite a hit on the EV sector, but unlikely to be an important hit as far as China's economy and exports is concerned.
What's interesting is Germany in particular is very against these tariffs. They reportedly tried to put pressure on Ursula von der Leyen to drop the probe. German Chancellor Olaf Scholz said that isolation and illegal customs barriers ultimately just makes everything more expensive and everyone poorer. He's right, isn't he?
Yeah, absolutely. And of course, they are concerned. They are concerned of both the BMW and the expensive sector of German exports to China being hit, because the Chinese, there is no reason why the Chinese should not turn around and also hit with an irrespective of type of motor car tariff by saying all European exports of motor cars to China will be hit by X%, whether they are electric or not electric. And the Germans do rely a great deal for the exports of expensive, in other words, luxury motor cars to China. They don't want this to happen. So they are not doing it because they are free trade lovers. They're doing it because they like themselves, which is great. I don't care why they are complaining. I think they are complaining rightly.
William, what's your assessment of the impact on the Chinese EV makers, if anything?
Well, I think it's material, to be honest, because European, relatively speaking, is the second potential big market. I think the first big market they are doing is in ASEAN, if you like, and they have been very successful. And actually, the offshore pricing of the EV is 20 to 25% higher than what they sell domestically in China. So I think there is still room for them to cut prices if they need it globally. But if Europe is putting on 20 to 38% taxes, because as of now, I believe, those cars are being sold 20% cheaper than their peer group in Europe. So I think it would be on par in terms of the prices. So definitely, I think it would impact, the sales volume in Europe, which is a huge market, for China down the road. And then the second point is, I think that also reflected the problem in EU itself, because we are seeing, as you mentioned, Peter, Germany is against it, but France is kind of like supporting it. So whether that the bill will be passed on or so quickly, I believe it would need some time. So I think it buys some room for the EV manufacturing in China. But I think their way of doing this is definitely they will try to maintain the cost down and then to reduce the price again.
I suppose the risk, William, is that we get retaliation from China, and then we get another trade war starting. Do you think that is a big risk, that China's going to retaliate now?
Well, if you look at the pattern, actually, China policy is sort of, reactive, meaning that if you do aid to China, China will do aid to you as well. So I think it's already priced in by the share price and market. And I believe that's why if you look at the new kind of like model of some of the EV sectors in China, they actually are already in the pipeline of producing some mid to high-end electric vehicles. The first batch they're producing is the 7 and 8 seaters, which has been selling very well in the last 3 to 6 months. But the next new products, if you like, is the mid to high-end luxury cars. In case, the retaliation to Europe, is happening, I think the domestic EV companies will get more market shares on the so-called luxury, EV sector.
Andrew, the EU Trade Commissioner, Mr. Dombrovskis, he says that there's 3 weeks until these duties become final and definitive. So he's open to negotiating with Beijing to see if there are other possible ways to remedy this situation. Do you think there is pressure on Beijing to try and find a way out of this?
This unrecognized but famous financial economist Clint Eastwood has summed it all up by saying, "Go ahead, make my day." So in other words, there is still the several weeks period in which the Chinese have opportunity of negotiating without huge loss of face. Yeah, it's meant to be. It is meant to be like that. If you don't do it, this is what I'm going to do. Okay.
Okay, well, thank you very much for your thoughts there this morning. You heard Andrew Freris, who is the CEO of Ecognosis Advisory, our regular Thursday morning commentator, and William Marr, who is Chief Investment Officer at the Grow Investment Group.
Peter Lewis's Money Talk.
I'm joined now by Ross Feingold, who is Director of Research at Caerus Consulting over in Taiwan. Morning, Ross.
Good morning.
Now, Premier Li Qiang is going to visit Australia and New Zealand. He's the most senior Chinese leader to visit Australia in 7 years when he arrives on Saturday. And before that, he will be in New Zealand, which is also the first senior visit of a Chinese leader to that country as well in about 7 years. Why the focus now on Australia and New Zealand?
Part of it's trade, driven by trade. New Zealand exporting its dairy products to China, Australia exporting all sorts of products to China. I think both of these countries want to have good trade relations with China. But of course, the visits happen in the context of Western countries, including Australia and New Zealand, frustration with China, to put it mildly, over a range of issues. We know that the government in Australia, since it took office, the Albanese government, they've tried to improve relations with China, which had deteriorated under the former government Morrison. The interesting thing about going to New Zealand is it is a right-of-center government that won and took over after the last election. So I think the reception there, other than on trade issues, might not be so welcoming as it would have been under the former government.
And is China, there's also some political issues here, isn't there? Is China concerned? Because obviously Australia and New Zealand are both members of the Five Eyes alliance, along with the US, UK and Canada, and they've sort of been strengthening that arrangement, haven't they? Is China concerned about that? Is that also a reason for this visit?
Certainly, China's concerned about that. I don't think they could do anything to stop that. They can't stop AUKUS from happening. They can't stop New Zealand from doing more collectively with Western countries when it comes to China. But again, they do have that trade. China does have that trade card to play, and at times it can be very persuasive because it does impact significant constituencies if China stops buying Australian and New Zealand products for basically political reasons, which has happened in recent years, as the listeners know very well. But I don't think China could tear away Australia or New Zealand from cooperating with Western countries when it comes to various China initiatives.
I mean, Australia obviously is still sort of sore, isn't it, about all these, all the bans that were put on after Scott Morrison called for an independent investigation into the origins of the coronavirus. So that then involved trade curbs being put on things like wine and barley and beef and timber from Australia. Do you think sort of relations between the two countries now have normalised since that?
I don't know if I would use the word normalized. They've definitely improved. I like how you described Australia as being sore over this. But again, the Albanese government and Foreign Minister Penny Wong have put a lot of effort to try and improve the relationship. But again, every time it seems like China and Australia are headed in the direction of improving relations, Australia does something together with the other Western countries, which angers China. Something with regard to China policy. The other thing to look at with this visit and to keep in mind that will prevent it from being a loving visit is there will be protesters. And that's not something that Li Qiang will get in every country he visits. But if you're going to visit Australia and New Zealand, there's definitely be people outside protesting your presence over various issues, whether that's religious freedom issues or Hong Kong or other issues.
I suppose what's interesting is New Zealand's position towards China, because as a member of the Five Eyes, it's sort of been traditionally a fairly neutral voice on China, hasn't it? But as you mentioned...
I think that's fair to say. I mean, they certainly haven't been the leader of curbing China's growth in any way. They haven't been the leader when it comes to South China Sea issues either, even though they are a maritime nation as well. They're is a group of islands. So they definitely don't take a high profile when it comes to the China stuff. But I think generally, especially with the right of center government, they're going to comply or participate in most of the initiatives that come out of the United States or other countries when it comes to China. So they're definitely in a difficult position. I mean, we know, like, historically, even New Zealand hasn't played that leadership role in the region when it comes to collective defense, foreign policy, or even China. But I think they will, if they have to make a choice between China and the United States, especially under the current government, I think they'll choose the United States.
Since the election of that centre-right government, is New Zealand's position hardening a bit more now towards China?
I think that's fair to say. Again, right of center government, they're just going to participate more. They're going to be a bit more outspoken on human rights issues, and they're going to look to the United States for its leadership in the Asia-Pacific region.
I wonder, another thing that maybe China might be concerned about here is, as well as these countries obviously cooperating together, they're also cooperating more closely with other Asian nations like Japan, South Korea, the Philippines. So it was interesting, wasn't it, that the New Zealand's Foreign Minister, Winston Peters, he was in the Philippines last week, and they seem to be elevating their relationship as well to what's going to be called a comprehensive partnership. So what's changing here?
Yeah, interesting. In the defense space, Philippines and New Zealand signed a mutual logistics support arrangement during the visit of Foreign Minister Peters to Manila, and they're talking about signing a visiting forces agreement as well, which would allow New Zealand military to train in the Philippines. Right now, Philippines has those agreements with the United States and Australia, and that's why we sometimes read about joint military exercises where U.S. and Australian troops will participate on the ground in the Philippines. So it's kind of interesting that New Zealand is looking to do this. And obviously, if New Zealand signs a status of visiting forces agreement with the Philippines, the goal here is joint training with China in mind. I mean, they could say that it's for humanitarian disaster relief operations, but we all know what the purpose is. And the purpose is if there's going to be a war with China, what role New Zealand might have. And again, we see that under the center-right government, and we probably would not have seen this under the left of center government that was previously in power in New Zealand.
I can see why the Philippines is doing this, because obviously it's got an ongoing disputes with China. But why is New Zealand doing it? What's in it for New Zealand?
I think they know it makes the United States and Australia happy, and I think this government is happy to go along with those kinds of initiatives. Maybe they just want to raise their profile a little bit more when it comes to defense issues in the region. They haven't been that high a profile, despite being a member of Five Eyes. So I could see it's not a surprise that the center-right government would take this step. But I guess what we have to watch beyond that is what other steps do they take to raise their military profile in the region.
And the Philippines says that the dispute with China poses an existential threat. They're saying they're not going to back down from asserting their claims, despite what they describe as Chinese bullying. They say we don't seek conflict, but we're not going to back down if what is ours is illegally taken by somebody, especially a bully. They're referring there to the south parts of the South China Sea, which China claims most of. This seems to me potentially quite a big flashpoint.
Oh, certainly. Relations between the Philippines and China have deteriorated significantly in recent months. There's an endless number of incidents that are occurring, which involve Chinese maritime militia or the Chinese Navy, Chinese Coast Guard, and the Philippines Coast Guard and the Philippines Navy. A lot of it revolves around the Philippines trying to send supplies to its grounded ship, Second Thomas Shoal. But there doesn't seem to be any outlook for improvement either. And we see the Philippines is becoming more confident. And I think people in the United States or some of the other Western countries would say, great, we're glad to see the Philippines being a bit more assertive in defending its sovereignty, which is a big change from the previous government under Rodrigo Duterte. And Marcos Jr. is getting a lot of high profile, kind of high fives from Western governments for doing that. So he's going to keep on doing it. We're going to keep seeing the spokesperson for the military or for the Navy or for the Coast Guard. They're making very strong statements. They're very good with social media, actually, and getting their message out. And I think we're going to see more of that in the near term.
Now, the other big news of the day, we were talking about this earlier in the program, the EU is going to press ahead with tariffs on Chinese EVs. They could be as high as 48%. They're going to apply additional tariffs of 38% on those companies that they say didn't cooperate with the EU investigation. That's on top of existing tariffs of 10% already. What impact, first of all, is this going to have on the Chinese manufacturers?
Well, it's certainly going to hurt their ability to sell electric vehicles in European Union countries. They're not going to be very happy about this. But I thought the most interesting aspect of this, and I'm sure the listeners who've been following this issue have seen some of the reporting, a whole number of European car manufacturers aren't happy about this decision either. Some of them manufacture in China for export to the EU, and some of them still export cars made in the EU to China, and they expect China to retaliate against vehicles made in the European Union. That's going to have an effect on companies like Mercedes and some of the other well-known car brands. So I thought that was really interesting how some of the leading European automakers are saying maybe this isn't such a great idea. But politically, it's good for the European Commission. They're not going to get a lot of criticism from the vast majority of the public, again, other than from some of the automakers, which probably aren't going to be a sympathetic crowd. They're not going to get a lot of sympathy, I think, from the public more broadly. So it makes for good politics as well. And we'll see what kind of retaliation comes from China, but there certainly will be retaliation. You could be assured of that.
I was going to ask you about that. You think there will be retaliation, because there's a 3-week period before these tariffs become final, and the European Trade Commissioner Valdis Dombrovskis was saying we're going to use that 3 weeks to try and see if China is willing to work with us to come up with a different way of dealing with this. Do you think there will be pressure on China to try and resolve this?
Hard to resolve this kind of dispute in 3 weeks, keeping in mind when did the European Commission begin this investigation? I believe it was last October. So it took them 8 months to come up with this tariff plan, and now they expect China to work it out within 3 weeks. It doesn't seem very likely. So I would expect the tariffs to be imposed, and any negotiations are going to stretch out longer than 3 weeks.
And of course, as we've heard this week, the political situation in the European Union is changing quite rapidly, isn't it? Both in terms of the European elections, which we just saw, which had far-right parties make some substantial gains, and now Emmanuel Macron's called a snap election in France. Is this going to make any change in policy towards China?
It's a great question, and I think we simply don't know the answer. The interesting thing about having these far-right parties in the European Parliament is that some of them have been accused of being too friendly towards autocratic countries, specifically Russia, but at times China as well. There's even people connected to the AfD, Germany's AfD, were arrested for spying for China. So we have to. What we don't know here is how much will China issues be on the agenda of these parties that have won so many seats in the European Parliament, and what will their attitude towards China be? Are they going to take a kind of traditional anti-communist, because these are right of center parties, so nominally you would think they're anti-communist? So are they going to take a tough line on China? And if they do take a tough line on China, then they're going to find that their friends are parliamentarians from national parliaments in Western Europe as well as the United States. So once again, politics make for strange bedfellows.
Ross, it's always a pleasure. Thank you very much indeed. That's Ross Feingold, who is Director of Research at Caerus Consulting in Taiwan.
Peter Lewis's Money Talk.
I'm joined now by Richard Harris, who is the Chief Executive Officer of Port Shelter Investment Management. Good morning, Richard.
Hello, Peter.
Now, you're in Europe covering the UK election for us, although we've now that might now be overshadowed by a French election as well, I think. But let's start with the UK. I suppose the significant moment of the past week has been the Conservatives have launched their manifesto.
Well, that's maybe the second most significant part of the last week. Probably the most significant part was the absence of Rishi Sunak from the International D-Day celebrations in France, which has totally mystified everybody because, the D-Day celebrations, which is 80-year anniversary since the Allies first invaded Europe, were a big thing. They've been a big thing generally among the population. And secondly, and perhaps for Sunak the most important, is that he had the chance to appear on stage as a statesman alongside Biden, alongside Macron, alongside the King, and he just gave up on that photo opportunity. And I think most political analysts are scratching their head about this one. But also it's taken hold in the general population in terms of really the fact that, does he really care? What's he really interested in? Is he more interested in the fabric of his party than the fabric of the country? So that's been a big a big piece of news this week.
And how has he explained that? Because it's an extraordinary mistake to make, really, isn't it? At any time, but particularly during an election campaign. Has he got an explanation for it?
Well, I think basically what happened is, he's of a generation where this doesn't really have as much impact as it probably would. I mean, my grandfather served in World War One in some very, very severe battles and was lucky to survive. My father was in World War II being bombed by the other side. Let's not take sides anymore because we're all Europeans. And when I was growing up, this thing was just part of my culture. And I think maybe the younger generation, don't forget that a lot of Sunak's advisors are basically surrounded by people of the younger generation as well. I just think they just didn't think of it. They just didn't think it's important. But it also shows how politically naive they were not to have the federal opportunity next to the president and the king. So it's just almost inexplainable. Sunak has apologized profoundly in a way you don't really hear most politicians, but I think the damage has been done.
Has the furore over this died down, or is there still repercussions from this as far as the campaign is concerned?
Well, as elections go on, these things build up. People refer to them a lot less because there's always new news on the day coming through. This election campaign has been rather strange. It's been really pretty bland. There are no real big ideas except coming from Nigel Farage on reform, and he hasn't got any ideas other than, there should be less immigration. And he's picking up quite a lot of support. But one of the interesting things is all parties, but especially the Conservatives, are coming up with a series of policies. You talked about manifesto a moment ago, and the Conservative manifesto is full of, we're going to give you money for this, we're going to give you money for that, we're going to give you money for something else. Most parties are doing it, but the Conservatives have really got on board now. And the big question everybody's saying is, well, if you were able to save money by bringing in more taxes from people who should be paying them, or putting a little bit more tax on people who shouldn't be doing it, why didn't you do it over the last 14 years? So the government is really in a very, very difficult position of trying to push its way. It's not playing a bad card very well at all. And basically, the main opposition party, Labour, are just sitting by and watching them dangle in the breeze.
I mean, this promise of £17 billion in tax cuts, we've heard it before many times, haven't we? Governments, when they haven't really got a plan for how to fund it, say it's going to come from savings elsewhere and efficiencies. They're going to make various departments more efficient. But time after time, we see those claims go up in smoke when they come to implement them. And I think the Institute of Fiscal Studies wasn't particularly impressed either.
Well, no, and as I said a moment ago, the argument is, well, why didn't you do it before if you can do it now? There's just nothing new there. The Tories have run to the end of the road. The Labour, as I said, haven't done too much in the last few days. They are deliberately not giving much away of their policies, which allows, of course, the Conservatives to attack them and say, you're going to spend even more than we are. But two wrongs don't make a right. And I think just by staying quiet, they're doing the job for them.
Is there a risk, or maybe not a risk even, maybe, Nigel Farage's party actually overtaking the Conservative Party in the poll? Are they that close now?
Well, there's always a risk, but I think what tends to happen with these minority parties, even though they're polling very well, I mean, they're only a couple of points behind the Conservatives, they're probably unlikely to win many seats, so they won't have much representation in Parliament, even though they may have a lot of popular votes. But minority parties tend to fade in elections. People say, I'm really angry, I'm going to do something else. Then they go into the polling booth and say, no, I'll stick with what I know. So I think Farage's party is doing a very good showing now. It's having a strong honeymoon period. And he's been unpopular enough to have several milkshakes and cups of coffee and things thrown at him already, which is part of the political scene in the UK. But I think that they will fade at the last hurdle.
It seems the Conservative Party is running a rather defeatist campaign now. I've heard that one of their main arguments now to vote for them is to stop Labour winning in a landslide, which is sort of a rather odd way of running your campaign, isn't it? Vote for us just to stop the other side from winning.
it is, or stop the other side from winning big. These are actual parliamentary political advertisements that are going out. So I think the Tories are resigned to defeat. Many of their key MPs are already retired, even from safe seats, and it's very difficult to fill seats with good people at this late notice. So I fear the Tories are going to be trounced, and it's going to be interesting to see how Labour are going to run the country after that. Strong suspicion is there probably won't be much change.
What are the polls saying?
Well, the polls are saying that Labour is moving ahead strongly. Last week, we were running at them having, something like 150 plus seats. And that's a good mandate for a government that comes in with real ideas to do things and change. You can take the president of Argentina had a lot of strong ideas, as did Margaret Thatcher in Britain many years ago, to come in and change. But if you come in with a strong mandate and no real policies, that's still going to be quite difficult for the government. And there's a strong feeling that Labour is not going to be much of a change than the Conservatives. They're just going to let somebody else have their snouts in the trough for a while.
Now, this campaign in the UK, it's suddenly been a little bit overshadowed, hasn't it, by what's going on across the Channel with Emmanuel Macron calling a snap election in France after he got trounced by the far-right party in the European elections. What sort of impact could that have?
Well, it does look like political panic is contagious. It's now going across the Channel. Yes, there was a strong showing by the right in Europe, which is interesting because we have had the left quite strong for a number of years, and now we've got the right coming through. And there's always a worry in Europe that the right may be far right. And of course, there's been if you go back to Germany in World War II, it's always been a spectre hanging over Europe. So it is a worry. And it looks as if Macron kind of panicked and said, yes, we need to have elections in France. Very much as Sunak did, maybe things will get worse, so let's have an election now. As in the UK, many of his aides have come back really quite negatively, saying this is crazy, we're onto a loser here. But maybe they're onto a loser already. Now, the different thing with France is that Macron will remain president, even if the parliament changes under him. But it will make it more difficult to push legislation through, and he may be forced to push through a couple of things that he doesn't really want. But the broad status quo in France, even if there's a right-wing government, remains largely the same, whereas, of course, in the UK, the government changes completely.
What seems to be interesting and a common theme across all these elections that we've been seeing in Europe, we've seen it in Mexico, South Africa, India, the polls are suggesting it in the UK, is that the incumbent government, whoever it is, whether they're left-wing, whether they're right-wing, are getting absolutely trounced, aren't they? And what is it that people are so upset about, that they are turning against their current incumbent governments?
Well, oddly enough, I wrote a piece in the South China Morning Post about 2 weeks ago, basically saying that developed countries aren't necessarily developed anymore. They've gone through a post-development phase, whereas developing countries, many of them, like China, are really very much developed countries, with fast roads, good trains. The general population feels upbeat because things actually work, whereas in many developed countries, regulation has set in so much that you can't do anything. So that if you want to renovate your house, you have to do it in a certain way, which is not only expensive, difficult, so people don't do it. So the economies, I think, in many of these developed countries are getting more and more hamstrung by regulation. And this goes for America and other places as well. So what happens, I think, is that politicians then become very cautious about doing anything. So very few politicians stand out. So for the middle ground, who are the voting ground, they find it in a way easy to vote for one side or the other because they're both going to be just as bad as each other. So, let's give the other guys a chance. So I think we've reached a stage now in maybe many of the developing countries in terms of politics where, yes, we are seeing a move to the right, but we're not always seeing a move to the right. More accurately, we're seeing a move towards the next party who may just be a little bit better than the last one.
I wonder if the concerns are the same pretty well everywhere. I saw earlier this week a French person on the television was asked, aren't you afraid of electing a far-right party? And she said, what's there to be afraid of? It can't be worse than what we have now. We can't afford anything. We can't get on the housing ladder. We can't get a job. There's lots of immigrants coming in. How can it be any worse?
I know we must pity some of these developed countries. I think people have very high expectations now in developed countries. Kids are saying, why can't I buy a house at 25? Well, I was very fortunate with good education, good job, worked hard, and I still couldn't afford a house at 30. So, I think expectations are much higher now. So it can't get any worse. It is a bit tricky. I think if the right play by the democratic rules in these democratic countries, it'll just be a different set of policies, just a different accent as much as everything else. What, of course, everybody fears is, say, the far right coming in and starting to restrict things like how legal decisions are made, what people are allowed to do, whether you're allowed to elect people out. And you've got certain places like Hungary where people are now worried that the far right have got in and are starting to make it difficult for these governmental changes to occur. And as my father used to say, he was a political scientist, he said, democracy actually is not about voting. It's not about voting in. It's about voting them out. And at least in France and the UK, we're seeing that likely to happen.
Good point, Richard. Thank you very much. We'll look forward to talking to you again next week.
Always a pleasure. Plenty of news, I'm sure.
That's Richard Harris, who is the Chief Executive Officer of Port Shelter Investment Management.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening this morning, and do please take a look at my newsletter at peterlewismoneytalk.substack.com for more information on developments during the Asian Trading Day. I'll be back tomorrow when I'll be joined by Francis Lund, the CEO of GEO Securities, and Simon Kavanagh, partner at BDA Partners. With a view from Australia is Toby Lawson, the CEO at Staten Partners down in Sydney. Have a good day.
Money Talk